Welcome back to another month of our Market of the Moment, and I am Tanya Kerr with Kerr Property Group, and
I'm Russ Phillips of the Russ Phillips team.
Yeah, and we're quite the dynamic duo. Let's talk about the market. How about it?
How about it?
Okay, go for it.
Is there one?
I mean, there's one.
So 1 month can tell us what happened, but it cannot by itself tell us what kind of market we are actually in. You can't just isolate stuff like that. So that distinction matters because July gave Central Texas some genuinely encouraging real estate numbers. And for example, closed sales increased by 21% in Travis County and 14% in Williamson County. Months of inventory declined. That's a supply and demand thing. That declined in both counties, and fewer listings expired or were withdrawn compared with last year in July. So those are positive numbers.
Yeah, for sure. But before anyone announces that the market is suddenly booming again, we need to zoom out because we had a strong month compared to a weaker month, and that doesn't necessarily mean that the market has turned. So my takeaway is this: July showed improvement, but the bigger picture still shows a highly selective, price-sensitive market. So what happened in July? Let's talk about July numbers.
Okay, let's talk. Travis County recorded almost 1,400 closed sales, which was 21% up from July of last year. Pending sales were up 5%, which gives Travis County some encouraging forward momentum. The median sales price was $521,000 and change, so essentially unchanged from last year. And the average price per square foot went down by just 2%. Months of inventory, again supply and demand, fell from 6.1 months to 4.7 months. That's not an indication things are selling faster, just less inventory.
That's right.
Right? Homes still took an average of 67 days to sell.
So Williamson County recorded a little over 1,000 closed sales, which is a 14% increase year over year. But pending sales were down 1%, so the future pipeline was basically flat. The median sales price was $415,000, down approximately 1%, and the average price per square foot declined 4%, and the median price per square foot declined 5%. So months of inventory fell from 5 months to 4.2 months, while the average days on market increased to 77 days. So again, less inventory on market does not mean it's selling faster. So the July headline is fairly simple. More transactions happened, but broad pricing power did not return.
Sales volume improved before values improved. Units closed. So that's better than the alternative, but it's not the same thing as a booming market.
For sure. When we compare 2026 activity with the 10-year monthly averages, Travis County closed sales have remained below the 10-year average during every month shown through July. Pending sales have also remained below their 10-year average.
At the same time, expired and withdrawn listings have been running substantially above historical averages, particularly during the summer months of June and July. So that means demand exists, but it's not been deep enough to absorb every home that comes to the market.
So Williamson County has tracked somewhat closer to its historical sales average. Sales briefly performed near or above the 10-year average during the spring, but fell below the average again in June and July. Pending activity was strong in March and April, but then it moved below the historical average beginning in May.
So at the same time, new listings and expired or withdrawn listings have generally remained above the 10-year averages in those categories. So very important distinction. A 14% or a 21% year-over-year increase can be completely accurate, while the current activity is still below longer-term norms.
That's right. So both things can be true at the same time. The percentage increase tells us that July was better than last July. But go ahead.
Well, the 10-year comparison tells us demand is still not historically strong.
That's right.
So let's talk about full year numbers from 2025 and what they tell us. The two annual dashboards provide another layer of context here. These are the full year 2025 statistics, so they're not a direct apples to apples comparison with just 1 month of 26, but they do tell us what kind of market July entered. So during 2025, Travis County recorded 13,394 sales, down slightly from the previous year, and the annual median sales price was about $506,000, down approximately 1%. Median days on market increased by 5 days, while the average days on market increased up to 68 days. Homes sold an average of 3.1% below asking, so that tight margin with the asking price remained, but the annual list to close figure was 92.7%. Indicator of a lot of price reductions.
Now, Williamson County recorded 10,228 sales during 2025, which was down 3.4%. The annual median sales price was $417,741, which was down 2.6%. And in 2025, the median days on market increased by 9 days, which ended at an average of 74 days on market. Homes sold an average of 2.5% below asking, and that annual list to close figure was 93.2%. So again, right around.
It's amazing how consistent that is.
Yeah, for sure. So the broader annual trend was not one rapidly rising prices or accelerating demand.
So it was a market with slightly fewer sales, softer median prices, longer timelines, and for sure more negotiation. So July of this year may be an early sign of improving activity, but let's not hold our breath. 1 month is not enough evidence to call it a full turnaround by any stretch. So I would call July an improvement, but not a victory lap.
The monthly median price chart makes the point even clearer. Williamson County began 2026 with a median price of $400,000. It fell to $395,000 in February, recovered to $409,000 in March, then to $410,000 in April, and it dropped right back to $400,000 in May, and then climbed up to $421,000 in June, and then settled at $415,000 in July.
So while the chart went up and down and had some decline in it, it's not a big sign of decline, but it's also not consistent appreciation.
Yeah.
So this market is moving up and down within a fairly narrow range, and every month shown in 2026 remains below the same month for 2024 and 2025. So in July, July 2024, the Williamson County median was approximately $426,000. In 25, it was $419 and almost $420. This July it was $415,000. So kind of tight range, but still.
Yeah, it's gradual.
Not where we were, right?
Yeah.
It's not a dramatic collapse by any stretch. We don't need Chicken Little. The market is not falling off of a cliff. It is working through price sensitivity and pressure on affordability. And there's a gap between what some sellers hope to receive and what the buyers are willing to pay. This tug of war has gone on for a while now.
Boy, is it. And the more realistic people can be and the more that they're listening to good advice, the better they will be served. In the end, they will make more money by listening to great advice. So the pricing correction is often happening before the offer, and the difference is between the final list price and the original sales price, and that tells another important story. In Travis County, homes sold for an average of 97.4% of their final list price, but only 93.8% of their original list price. So again, we see that means that price reductions had to happen. In Williamson County, homes sold for 97.7% of their final list price, but 94% from their original list price. So when someone says homes are selling around 97% of asking, that statement is technically correct, but it usually refers to that final price after reduction. So that's a good question to ask if somebody's throwing out stats your way. Now, compared to the original list price, the number is closer to 94% original list price to sales price.
Yeah. So this suggests that many sellers are not necessarily losing a huge amount during the final contract negotiation, but they're correcting the price before a successful offer arrives.
And I think they're having to correct the price to get feet in the door, is what that says.
100%. Yes. Yeah. You have to be monitoring, right? Mm-hmm. Buyers are going to buy based on value and what their perception is, not what the seller's perception is.
Yeah, and if your condition and your presentation is phenomenal and you're still not getting feet through the door, then it is price.
Anyway, the market is not always beating up sellers at the closing table. We just got to be priced right. So what it's doing is it's forcing you to price correctly. We've kind of belabored this point now, but to wait 60 or 70 days to make that correction can actually cost you more than launching at the right price from the beginning. Not every price range is experiencing the same market. The annual buyer demand charts also show why county-wide statistics can be misleading. So in Williamson County, the largest number of 2025 sales occurred between the $300,000 and $400,000 price point.
Still the same, yeah.
The next largest category was between $400,000 and $500,000. Now, some of that might have been driven too by new construction in those price ranges with their incentives. The majority of Williamson County sales occurred below $500,000. Travis County was different. Tell us about that.
Yeah, so Travis County had the highest sales volume in the 300 to 400 range as well, but its activity was distributed more broadly across the higher price points because the luxury market moves faster in Travis County. You just have a better luxury market. So Travis County also recorded more than 1,100 sales at the 1.4 million and above range. So that's why saying the Travis County market or the Williamson County market only gets us so far. You have to understand the nuances of both. A $350,000 home in Hutto and a $1.5 million home in West Austin are not competing in the same market, nor are they attracting the same buyer. So what does this mean for sellers?
For sellers, this data reinforces the importance of the first few weeks on the market, like we talked about a minute ago. The first 10 to 14 days give us really valuable information because you kind of gauge how big that pool of pent-up demand is at that point. Yeah. If not by actual showings, at least by eyeballs.
Yeah, we have less buyers buying. And so if they're not showing up through the doors, we have an issue.
Yeah, and we can see the eyeballs in the MLS numbers. A lot of people don't realize that. Anyway, and as far as showings, are they coming back for a second showing?
Right.
What's your experience there? I wish we could get answers on every showing. But what we're looking for is trends that we can change or fix versus what we can't. Yeah. If people say they don't like the location, obviously we can't do anything there. If they say, boy, I really hate that paint color on the accent wall, hey, guess what? We can fix that.
Yeah. And by the way, if you get plenty of showings and no offers, that's new feedback. That is important feedback as well.
That's the market talking. Okay, are competing homes going under contract while ours remains active? You know what that is? That's when you're priced in such a way, or your combination of condition and price is selling the house next door.
Yes, 100%.
Don't be that guy.
Yeah, and
So the market gives us answers in all these ways. Now, a smart pricing plan should include an agreed upon review point before the home is ever even listed. Don't wait until 60 days to accept what the first 2 weeks already told you. All you're doing is getting stale.
Yep,
And you know what buyers say? You know what every buyer says when they walk through the front door?
how long has this been on the market?
Every time. Every time. And when your answer is 60, what they don't tell you is they're going, well, nobody else bought it. I'm not going to be the sucker.
Right, yeah, but I can negotiate.
Yeah. How deep can I get a discount? Okay, so your desired net is important, but it's not a pricing strategy. And frankly, what you need is not something that we can expect the buyer to care about.
So the successful sellers in this market are aligning price, condition, presentation, access, and marketing from the beginning. They're not asking the market to overlook any mismatch between price and value. That's success in the market.
It's a beauty pageant and a price war.
That's right.
Yep.
Homes with longer market times, previous price reductions, condition concerns, or weaker presentation may provide room to negotiate.
That negotiation may involve the purchase price or repairs, closing costs, buying down an interest rate is pretty popular, or other contract terms. But buyers should not assume that every seller is desperate.
Inventory declined in both counties, and the best positioned homes can still attract strong attention. So if somebody is thinking about getting on the market, having less competition is great. We just need to entice a buyer. A home that is properly priced, well maintained, and located in a desirable area may behave very differently from the county average.
The market rewards patience, but it really rewards preparation.
For sure.
All right, let's say the market for the house you're selling is down 5%.
Yeah.
Okay, and that's a $400,000 house.
But you're going to buy a larger home.
Right, and
Higher
on
price
average, they say that when people move up, it's like 50%. So now your $400,000 sale helps you buy a $600,000
That's right.
new place. All right, if the market's down 5%, you're losing, quote unquote, $20K.
Right.
But then your discount on the other house is $30K.
Yeah, for sure. Yeah.
So, all right, you need to evaluate the sale and purchase as one big financial decision, the big picture. You might need to be realistic about the value of the home you're selling, and you may need to also remember you're going to gain negotiating power on the property you're purchasing. The bigger the price,
Yeah.
the bigger the negotiations.
That's right, for sure.
You have to play in a whole different stratosphere.
Yeah.
Okay, so you might get a lower price, you might get repairs you wanted, closing cost assistance, or some other sort of favorable contract term. So the goal is not necessarily to win, because sometimes when we enter the transaction with that mindset, it becomes painful at some point.
Yep.
The goal is to create the strongest total outcome,
Yeah.
the best situation for you as a big picture. All right, so here's the bottom line. July was an encouraging month for Central Texas. More homes sold, inventory declining, fewer listings expired or got withdrawn compared with last year. But the broader picture still shows sales and pending activity below historical averages in the important parts of the market. So it shows longer market times, elevated listing failures, soft or flat prices, and buyers who remain highly selective. Don't we know it? But this is not a housing crash.
No, but it's also not a frenzy.
Definitely not a frenzy. It is a market that is improving in activity before it improves in pricing power.
That's right. So a strong month can create momentum, but a full year tells us if that momentum is durable.
Okay, so for now, I would describe this as a positive signal inside a market that still demands discipline. So the market is moving, but like a teenage daughter, it is not forgiving.
Yeah, and the countywide numbers are only the beginning. Your city, your neighborhood, your price point, your property type, your condition, your competition will determine how the market actually moves for you and what it means.
Yep, the right question is not simply is the market good or bad? The better question is, what opportunity does this market create for my specific situation?
Oh, for sure. There's no bad or good market. It just depends who you are and how
There's
you're...
the market.
Yeah, there is.
We don't make the market, we just interpret it.
That's right. And this is where informed strategy makes all the difference. And if you're looking for two informed people, well, you've got them.
Thanks for taking the time to watch this. Of course, we want to talk to you individually. Feel free to call us. We'll explore whatever your needs are and try and give you the right expectations.
That's right.
Until next time, I'm Russ.
And I'm Tanya.
We'll see you soon.